Hey everyone, my name's Glen James. Thanks for jumping on and having a look at my introduction to investment platforms. Now, in this video, I will be using the Vanguard Personal Investor as a case study for the investment platform because it's a platform. They've recently overhauled their fees, and a lot of people in the My Millennial Money community wanted to know a little bit more about Vanguard and how it works. But I'm more interested in showing you the concepts, and the best way to show people concepts about investments, investment platforms, and all the good stuff in between is to show you a real life case study, just so you can have a real tangible reference point. The video here is for educational purposes, and it is not to be considered personal financial advice. We'll talk about a managed fund versus an exchange traded fund. We'll discuss how platforms and brokers work, generally speaking. I'll do an example of investing on the Vanguard platform with one of their managed funds, an ETF, and a direct share, and I'll show you the fees for that. Through this example, I'll use the Vanguard Diversified Growth Index Fund. We'll have a look at the benefits and limitations of the Vanguard Personal Investor. We'll have a look at the fees, as discussed, for the platform itself. And I just want to let you know I don't have any commercial relationships with Vanguard, nor is this sponsored. And I will just say that this video, it is set at beginner's level. If you're thinking about complex tax issues and all the fun stuff that I would like to geek out on, it's not the purpose of this video. This is just to give people a basic introduction to investment platforms, how they work, and specifically the Vanguard platform as the case study. So let's get into it. So as I said, we're going to look at and use the Vanguard Diversified Growth Index Fund for this example. This is a managed fund, and it can also be purchased as an ETF. And let's just have a look. When you purchase this fund, I'll just draw a round circle here. The asset allocation is split up as below. So 27% of this fund is actually invested in the Vanguard Australian Shares Index Fund. So you can actually buy this yourself directly, or you can pay an extra fee and pay Vanguard to wrap it up in a diversified fund like we've got here. So if we have a look at the growth portion of this investment fund, you'll see when you add them up, the fund has about 70.1%, we'll just call it 70% allocation to growth assets. And I won't cover asset allocations in this video, but just to let you know, if you wanted to invest in the Vanguard Diversified Growth Index Fund, you would get an allocation of 70% growth across Australian shares, international shares, some international small companies, and some emerging markets. And the conservative portion of the portfolio is spread across the bond index fund and the fixed interest fund. We won't get too much under the hood of the mechanics of the investments because it is more about investment platforms, but you can effectively buy this fund on a platform or direct with a broker. How does a platform work? I like to draw this a couple of ways, and I will draw it both ways because we all learn differently. Pretend this circle here is the platform or the account. And inside the platform, there's going to be another, I'm just going to write cash there because there's going to be another cash account. And you would transfer money from your personal bank account into the platform onto the cash account. The other way I'll draw it, I'll actually draw a platform. And one of the investments on the platform is the cash account, and that's always there. So you would invest into that cash account. Then the platform will have an investment menu, and there'll be a heap of different investment options. And in the Vanguard Personal Investor, they've got a heap of Vanguard ETFs and managed funds, but also they've got access that you can buy the top 300 direct shares on the Australian Securities Exchange. So again, we're using the example of the Vanguard Diversified Growth Fund. So you can log in and effectively place a trade, and we'll just call it the ETF, and purchase, and we'll just say $5,000. You can transfer your $5,000 across to the cash account and then invest in the Vanguard Diversified Growth Fund, and happy days. Now, what will happen is when the ETF or the direct shares, so you could also just write CBA on the platform, and then throughout the year, if there's any dividends being paid or distributions that get paid out, they'll go into the cash account. So if we draw it the other way, it could be that we've got $5,000 in VDGR, and then we've also got, we'll add another $2,000 in CBA shares. So all of my investments is on a platform, and everything goes through the cash account. If I want to buy and sell, it goes through the cash account. And then at the end of the year, they will spit you out a consolidated tax statement, and I'll give you an example shortly, that you can fill out your tax return or give to your accountant. So a platform is a one-stop shop. So the difference with the Vanguard Personal Investor is, if you're keen on buying just Vanguard diversified funds, the platform can be a really good one-stop shop because they'll take care of all the reporting throughout the year. And unlike a broker, which we'll get to next, you really don't have to do much else yourself. How does a broker work? You can set up a broker account, and basically what happens is there will be a cash account. And some examples of brokers, it could be your E-Trade, your ComSec, Open Trader, who are actually there just disclosing at the time of doing this, they're sponsoring some live events of ours and some podcasts. It could be Superhero or Self-Wealth. So a variety of different brokers. Now, what the broker does is they communicate with the ASX to say, and then if I want to buy $5,000 worth of VDGR, they will communicate with the ASX. The ASX will basically facilitate someone else's broker who are perhaps selling $5,000 worth of these units or shares. And then that's kind of how the broker works. They broker the deal, and then once completed, I've got 5,000 VDHG units or shares in the ETF, and it's all in my name. And each year I'll have to collate any paperwork of distributions being paid. If it's shares, it might be half yearly. If it's a listed fund like this, it could be quarterly. Whatever the distribution or dividend frequency is, you'll have to collate your own paperwork and give to the accountant. And it can get tricky, but effectively that's what the broker does. And if you're with E-Trade at the moment and you want to move to ComSec or Open Trade or Superhero or Self-Wealth, you can just effectively change, I'll rub that out, you can change the broker, put a different broker in, and then you can just continue to move money into your brokerage account and buy shares yourself. Really straightforward. The difference is, if we go back, the platform is in your name, and whoever the company is, and we'll call it Vanguard for this platform, they will purchase the shares and direct ETFs on the exchange, or direct shares. Effectively, it's in their name, and they will take care of everything. Where the broker stuff, you do it all yourself, which is fine. And to be honest, I kind of think about it with the broker versus platform. So I own investment properties, and I pay a real estate to manage the property. So they manage the tenants coming in and going out. They'll make sure the money's collected, and at the end of the year, they'll let me know if there's been any issues and send me a consolidated statement. And it's really convenient, but I pay a fee for that convenient. Likewise, the broker world, you might just decide, I want to use a broker myself and not worry about having a one-stop shop as a platform and not pay the platform fee. The advantage is with the Vanguard Personal Investor, if you just want to invest in Vanguard, it might make sense to use the Vanguard Personal Investor because they don't charge a fee to have money within Vanguard. And so we'll get to the fees. So that's just basically an overview. But the fees for the Vanguard Personal Investor from the 18th of August 2021, so there's no platform fee for Vanguard products. So again, I might draw the platform this way this time. There's $9 brokerage for ETFs and ASX shares, and there's a 0.1% platform fee for non-Vanguard products. So let's just do another live example here. We'll just say we've got $5K in the cash account and we want to buy $3K worth of Vanguard Diversified Growth Fund, and then we want to buy $2K of CBA shares. What will happen is, because the CBA shares are not a Vanguard product, there will be a platform fee each year, and it'll be taken out every 3 months from your cash account of 0.1%. So basically what they will do for that fee is invest on your behalf, and when there's dividends, they'll pay them out to the cash account, then you can reinvest as you will, and I'll get to some of the mechanics around the dividend reinvesting with the Vanguard platform. And at the end of the year, they'll give you a statement and it'll say, throughout the year, you receive these types of dividends and distributions from the funds and the direct shares, and we're charging you for the non-Vanguard side of things. So again, you get what you pay for. If you want someone to do paperwork for you and to house your investments on a platform, you've got to pay for it. Let's talk about investment fees in general. The 4 types of fees that we will discuss, the platform fee, which when using the Vanguard platform, we know that if I draw that same scenario with the cash account, the CBA shares, and the Vanguard fund, we know the platform fee will be 0.10 just for the non-Vanguard stuff. Brokerage, a lot of you would know when you place a trade for a direct share or ETF, there's a brokerage fee. Vanguard charge $9 for this. There are brokers out there that don't charge anything for it. And for those playing at home, I was just looking on the ASX website today, and you can do the same, and you can search fees and settlement costs. I think I read it was about $2.50 for the ASX to settle a trade. So, a lot of these companies that are doing $5 trades and $0 trades, you can see there's not much margin in it because they've got to pay the ASX $2.50. Buy-sell spread. This might be a new one that you haven't heard of, and we will get to it, and it's around managed funds. So when you place a trade on a managed fund or purchase a managed fund on the Vanguard platform, there's no platform fees for that or brokerage. However, there is a buy-sell spread that they charge you on the way in and on the way out, and they're usually nominal fees. But you just got to know you don't get anything for free generally. And some of these investment brokerages that are out there charging $0, I'm just kind of sitting in the sidelines waiting to see how they're making money as a business. So if we're doing $0 trading, the revenue for the business has to come from somewhere. Some of them are trying to make a one-stop shop and will try and later on sell you crappy insurance and personal loans and debt consolidation because I believe they've got to make their money somehow, and it's just a wait and see. So we just need to know, be cautious when you see stuff that's free. I do this YouTube channel. I do my podcast. It doesn't cost you to consume, but I advertise during it, and I'm going to play an ad soon. And then we've got the management expense ratio / indirect cost ratio, ICR. So, for example, if you just went and paid $9 brokerage or $9.50 with Self-Wealth or $5 with Open Trader or Superhero, and you purchased Vanguard Diversified Growth Fund, they've got a fee that ETF, you'll pay the trade, and then their annual fee that's taken off before they report the return is 0.27%. And you'll see soon the managed fund version is 0.29%. So that's basically how the managers make money. A lot of these Vanguard funds do not have indirect cost ratio. There's two fees that are bundled up as the 1%. Usually you'll find with the MER and the ICR, for example, if it was an actively managed fund and the MER ICR was a total of 0.3%, there might be, for example, built into that an MER of 0.25 and an ICR of 0.5 gives you the 30. Sometimes there's underlying funds within the fund that charge the fund manager. So again, I don't want to get too complex, but these are the 4 types of fees. And apologies for my scribble. So a managed fund versus exchange traded fund. So Vanguard Diversified Growth Fund, Vanguard Diversified Growth Fund. We know there's 70% growth. An ETF is just a managed fund that you can purchase on the share market. So what we need to understand is there's no huge difference with the underlying investments. The differences are how you're buying and selling units and also what's happening in the background of the fund. Further to that, you can really see the price of a unit on an ETF throughout the day as it's trading on the stock exchange, where a managed fund is going to be priced once a day only. And for example, if you put a trade in on the Vanguard Personal Investor before 1 p.m. on a weekday, you'll get that day's unit price for the managed fund. And they're unitized trusts, so you'll purchase units, and I'll show you an example. However, the exchange traded fund, you can buy that from 10 till 4 p.m. on any broker. The most complex that I will get now is there could be a tax advantage to use the exchange traded fund, because if someone sells a big chunk out of the main pool of the managed fund, which is a sale event, it will be spread across all unit holders, where if someone sells their units on an exchange traded fund, you won't be affected tax-wise. Again, I don't think this is a huge concern if you're just getting started with investing, or if you've only got 1, 2, 3, 20, 10, pick your number. I think it becomes a big problem if you've got some serious money that you really want to invest. But in the main, what I want you to learn from this slide is that an ETF is just a listed managed fund, and just the way they carve out the units and the ownership of those units is different. So here's an example of the Vanguard Personal Investment login, and someone sent me their one. You can see that they set up their account April last year, and you can see here they've got their Vanguard cash account. So they've got $138 in their cash account. You can see available cash, and they've got $3,500 invested in the Vanguard Diversified High Growth Index ETF, VDHG. So again, that's the platform. Cash, they've got $138, and if this is the investment, they've got 3.5K. So this person could effectively transfer another couple of $1,000s into their Vanguard cash account and place another trade and they could buy, CBA shares on this platform and see it here. And I will get to with the fee change, because at the moment, Vanguard are not charging you for a brokerage fee for one of their ETFs. That's changing. So for those who have the ETF and still want to use this platform, we'll talk about maybe what we can do going forward. But here's an example when you log in to the Vanguard platform, and then you can see here you can invest or you can sell down units. We know here there's 59 shares in the ETF at the $59 price. So just as a sidebar, if the world craps itself again and the share market falls and this goes down to $40, you will see your account, if this is, money and this is time on this axis, you will see your account, be like a yo-yo going up a hill. If the world craps itself and it goes from $59 to $40, don't panic or sell, because you still own the underlying shares of 59. And then, things will get back to normal, apparently. You've just got to look at history. And while there's no, the investment disclosure where they're like, past performance isn't an indicator of future performance, absolutely. But we know if you look back 10, 20 years, most things are slowly going up. And we've just got to set stuff up and not look at it daily. So I'll just pause there. If I got a bit out of control and a bit deep with some of the concepts, I would recommend my online course. And this is an ad. It's Glen's online school. I think there's like over 3 hours of videos, and we talk more about the asset allocation overview. So for example, we look at money, time, we look at defensive, 50-50, 70-30, 100% growth, what it all means. And there are, I think, 4 or 5 videos, and there is 3 hours worth. And so this 30% defensive and 70% growth here, that's like the Vanguard portfolio that we're talking with. So if you do want a further deep dive about investment concepts, it's only $88. I am told by an accountant in Australia, if you've got existing investments, like any type of investments in your own name, and you purchase this, you can claim it on tax because it is 100% education, but check with your tax accountant on that one. But we've had great response, and it really is set at beginner level. And I think before you go investing into the markets and working out what you want to do, invest in some basic education, and you can check out My Millennial Education, and there's a link in the comments below. So let's have a look at some practical fees. So we've got the ETF. We know and I've just put direct, and I've made up a broker. Okay, so just think any broker out there that's $9.50. There's no platform fee because you hold it direct. Each year it will cost you 0.27 or $13.50 for the $5,000. So if we go year one, $23 in the first year because we've got to account for the brokerage. And if we go year two, we've just got to account for the investment fee. So the total fee per year, if you just had $5,000, is 0.27. Let's go down, we'll do it in the next one. Here is the analysis. If we bought this same ETF on the Vanguard Personal Investor, brokerage, it's $9. There's no platform fee because it is included as at August 2021. The investment fee, 0.27 or $13.50, and it's the same. So this is a really good indication that this current fund, VDGR, it's a wholesale managed fund that you can buy anywhere. And it's an ETF that you can buy with whatever broker you want. Remember all the Self-Wealth, Superhero, Open Trader, ComSec, all that stuff. NAB Trade, whatever broker, you can buy the same thing, or you can buy it via the Vanguard Personal Investor and their system. So let's now have a look at the managed fund version. This is the APIR code. You can put that code into Google and you'll see all details about the fund. Now, we know when we buy a managed fund on the Vanguard Personal Investor, there's no brokerage, there's no platform fee, but the investment fee, as I said before, it's 0.29 as opposed to 0.27. So it's $1 more per year for $5,000. The buy-sell fee, this is like the brokerage for managed funds. It's in the background. A lot of people don't understand or they miss this one. It's 0.09 for this one. And the fee in year one is $19, but the fee in year two is $14.50. So we know it's cheaper in year one to not pay the brokerage based on $5,000, but ongoing on the platform, it's 0.29. And just, I'm sorry, to me, I'm calling that it's the same. Like it gets to the point where we just have to worry about the concepts and what we're investing in, not trying to worry about 0.02%. But this is just how you kind of work it out. Now let's do this OR. So let's have a look at investing a direct share via Vanguard Personal Investor. And I will say the Vanguard Personal Investor, their PDS has some examples of using direct shares and all the fees combined, but you can, take a screenshot and do this yourself. So again, if we go direct, it could be $9.50, it could be $5, it could be nothing, depending what broker you use. With Vanguard Personal Investor, it's $9. Now, because this isn't a Vanguard product, it's 0.1% or $5 for the year for the $5,000. There's no investment fee for direct equities, no MER, no ICR, because you're owning a direct share in the company. And I love the fact that you can actually buy a share in a company. There's no buy-sell spread for a direct share. So if we have a look here, the total fee in year one for buying $5,000 worth of CBA shares on the Vanguard Personal Investor, $9.50 or whatever your brokerage is, or $14 if you use Vanguard. The total fee for the second year, based on $5,000 invested, if you just had $5,000 in CBA, and we've assumed no additional money contributed or investment growth, just really simple, it is $5 or 0.10. So that's a basic screenshot. Now, the question is, buy-sell fee versus brokerage. So are we doing a managed fund or an ETF? Let's have a look here. Remember, brokerage on Vanguard, and you can just call this the Vanguard Diversified Growth Fund because that's what I've used down here, the investment fees. Brokerage, $9, the buy-sell, 0.09. So that's our managed fund brokerage, quote unquote. We'll assume $5,000 in the first month, and then the first month after our initial investment, we're doing $1,000 each month. So after the 12 months, there'll be $16,000 invested. So it's kind of hard to work out because the fee, as we put more money in, the investment fees are kind of growing more, and I just don't think it's worth splitting hairs for this example to work it out on a spreadsheet. So kind of the maximum that you would pay over the 12 months, even if you fast forwarded it, the next full year of $16,000 invested, you would pay $43.20 for the ETF and $46.40 for the managed fund. As a worst case scenario, the total fees over the first 12 months with our $5,000 invested and $1,000 each month after for 11 months is $151 for the ETF and $60.80 for the managed fund. So strictly speaking, I think for lower amounts, the numbers here are saying the managed fund on the Vanguard platform is more beneficial in terms of your fees. However, if you wanted to plonk in $10,000, that buy-sell, where are we, of 0.9, it's going to get you to $9 anyway. So it's probably quite clear that if you're dropping in parcels of, $20,000 here, and then we're just going to wait and then dump another 10,000 or 12,000 here, and then we're just going to wait and then drop another $20,000 here, you will save money on fees by using the ETF. So I think in our mind, if we're just doing, up to $1,000 a month and seeding it with up to $5,000 all day long, the managed fund option is cheaper in terms of fees. There are some, other nuances that we won't get into around, like for example, your brokerage. When you pay $9 for brokerage, you can't claim that on tax, but it's added to the cost base when you sell your share. So if you buy $1,000 worth of shares and it grew to, $1,500, and you went to sell this parcel a year later, capital gains tax says ordinarily there's $500 worth of gain, but there's actually $491 worth of gain because we've added that $9 onto the cost base for CGT. And that's the advantage of a platform. It tracks all this crap, guys. And I've resolved in my life, I want less stuff to track, and I'm happy to pay for a platform. But you can see here, if you want to go and buy an ETF direct with a broker, you might get zero brokerage somewhere, and you'll pay a slightly cheaper fee for the ETF, but you'll have to do all the crap yourself. And I'm not really for or against platforms in their own right. For me, it goes back to what do I want my investing life to look like? And I like less paperwork. So I just want to finish up on a fee example. If you are trying to work out as a percentage what the fees are, let's just do it. I'll do a live example here. I've got my calculator. If someone charges $9 for you to invest $5,000 brokerage, okay, put in to a calculator 9 divided by 5,000. So I'll do that now. 9 divided by 5,000 equals, and it's going to equal 0.0018. Now, if you get a bit trapped with the decimal points and all that stuff, just hit times 100 on your calculator, and it will tell you that it is 0.18. So we know that paying $9 brokerage on $5,000 is 0.18, where if we did the managed fund of 5,000 with no brokerage, but it has the buy sell of 0.09, it's cheaper than paying the brokerage. And just finally, if you did want to drop $20,000 into CBA on the Vanguard platform and you didn't want to have paperwork and worry about letters in the mail and all that stuff, that 0.1 fee that Vanguard charge to have your non-Vanguard stuff on the platform, again, let's go $20,000 times 0.1% is $20. So even if you did $50,000 of CBA shares on the Vanguard platform, they're only going to charge you $50 a year to do all your accounting and admin. It's pretty good, but there are some limitations and we'll get to that. So this is the wrap up of what I think some of the benefits are of the Vanguard Personal Investor. And it can be like this for some platforms, but specifically the Vanguard one. It's a great place for introduction to investing. It's a great one-stop shop if you just want to pump Vanguard diversified funds. It's awesome. It's cost competitive. Again, if you're just pumping Vanguard, I think it's pretty cost effective as well to buy top 200 shares. Again, you're paying the 0.1, but if you just chill out and punch it into a calculator, that 0.1% fee of platform fee, which you could claim on your tax return. $50 to manage $50,000 of direct equities. That's cheap. It's got the consolidated yearly tax report, which we'll get to. You don't need a financial advisor for this platform. It has ownership options, has an app for iOS and Android's coming. So the consolidated tax statement, so this is from June 2020. It'll have your name and address there. It'll have all your details there. And this, see here, these are the tax codes for the places on your tax return. So it will say you've had the Vanguard Diversified. So remember, everything on the platform, if you've got the managed fund, if you've got direct shares, at the end of the year, it will spit out this statement and say for everything that you hold, just put, and there'll be amounts there, just put these amounts in your tax return. Done. Easy. Total income, all the amounts, unfranked, franked, and if you've got international stuff, it will show it all. So that's what a consolidated tax statement looks like. Some limitations. It's $500 per investment of ETF and shares, so per parcel. With managed fund, you've got to seed it with $500 for each managed fund, and then there's unlimited or no minimum cost to trade. Only the top 300 ASX companies, and that's because they're a trustee of your money and they've just got to make sure that it isn't the Wild West. And usually what happens is with some of these smaller companies, there's just more drama, more, trading halts, liquidity issues. So a lot of platforms just won't allow you to go outside the top 300 companies or very far from that. So it's custodian ownership. So your name isn't personally on the CHESS register. JP Morgan do the direct shares and the trading, but I don't think the CHESS ownership thing is the be all and end all. Most of my investments aren't direct. So this is a thing here. There's no dividend reinvestment for shares or ETFs. So that could be an issue. And I think they've just done that to make it easy for their tax and the platform. Just all the shares pay out. So what that would mean is, again, here's our platform. We've got our cash account, got our VDGR, and you might have CBA and Woolworths. So all that means is the dividends don't get reinvested. They get paid to the cash account. Then you can transfer that if you want to take it home, or when it builds up again, you can decide where you want to invest. By default, the distributions from the managed funds are automatically reinvested, but you can contact Vanguard if you want the distributions to be paid into the cash account. You can't move your own funds onto the platform, but you can actually, and this is the advantage with dealing with a company that actually get investing. And sure, there's some downfalls with this, but it is a low fee platform. You can actually request, if you've got CBA shares or Woolworth shares or an ETF or managed fund, you can request Vanguard to transfer the holdings off. So you can actually transfer them to your own broker, which is really cool. There can be some, if you do have the managed fund and you want to leave the platform, they might own your soul if where you're taking the managed fund do not support Vanguard or they're not a wholesale investor. So you've just got to know they might own your soul. Now, at the moment when I'm recording this in July 2021, it's not set up for automatic investing, but the good news, guys, a little bird who is at the highest management level of Vanguard Personal Investor in Australia, a little bird in that company has told me that the automation is going to be rolled out. So automatic investing and automatic, pulling cash from your bank account to put into the platform. So not set up for automatic at the moment. So what you would have to do is wait until you you've got enough money, and then set a timer every month, just transfer your money over via BPay or whatever you do. And yeah, it's they don't do new payments platform. So they do BPay, direct credit. So yeah, save up your cash, move it over to the platform, and then manually place your trade. And I don't think it's a bad thing, manually placing your trade. It's good practice. So what if I already have investments on the platform? So the example I used earlier, the guy had an ETF. He had Vanguard Diversified High Growth. And we know going forward that he'll get slogged with $9 for that ETF. Going forward, he could just put his money, leave that there, leave the 3,500 there, and put his money into the managed fund. That could be an option. And then maybe if there was a market event and the price really fell lower than what he paid for it, he might sell down and buy into the managed fund, or might just leave it. I mean, it's probably worth just leaving. How do you invest if you don't have the $500? Well, you could save up the $500 if you're buying a managed fund, then put it in. Then you can add whatever you want, whenever you want. And the only other thing is, maybe Vanguard Personal Investor isn't for you. Maybe you need to look for a Raise or Spaceship or somewhere CommSec Pocket that actually allows for the smaller amounts to invest. Is it worth buying direct shares on this platform? Again, let's have a look. If your sole purpose, if this is the cash account, if your sole purpose is to buy Vanguard Diversified Growth or High Growth and pump that, and you think, oh yeah, sure, I might want to get some Woolworth shares or whatever, or CBA, knock yourself out. It's not a broker, it's a platform. So if you use it just for equities, you just need to know it's a $9 fee, and they're going to charge you 0.10 per year to do your accounting and your tax statements, and you can't use the dividend reinvestment plan. The only thing as well, with direct shares on this platform, if there's corporate actions or you get a letter, if you're a shareholder in CBA and they say, hey, we need you to vote on this issue, you're not going to get that because you don't own it directly. Let's just have a look at this. Okay, Ella, do they send a tax statement at the end of the financial year? Yes, they do. It's all sorted. Is there a way we can invest in just the S&P 500, or is it only ETFs with a mix of European or American countries? Yeah, so the Vanguard Personal Investor, it only gives you option to invest in the Vanguard International Shared Fund, but you've got to realize 70% of that fund is North America anyway. So yeah, you can't just invest in an S&P fund. And I think the reason you can't invest in VTS, which is their whole market fund in America, is because it's domiciled in America. So if you invest into this fund via your broker, you're dealing with the US tax office, and it's a pain in the ass. But there you have it. Cameron says, is there a way to have my deposits automatically invested? Not at the moment, but we know that it's coming soon. Lucy, fees involved to move. Other selling points. Does it have auto invest? That's soon. I don't think there's a minor option at the moment, and it's not Chess sponsored. But again, Chess isn't the end of the world, guys. Fees involved to move. You can't move your own stuff on there. So you would have to sell down wherever you're investing, or just put new money onto the platform. Is it better invested through VPI or CommSec if contributing annually? Well, I reckon if you're just going to throw in an annual amount into a Vanguard ETF, if it is that annual amount over $10,000 all day long, the ETF, individual parcels on Vanguard Personal Investor, they'll do all the other housekeeping. If it is via CommSec, again, same price, but you've got to do the paperwork, and yeah, you can just choose what you want to do. Just on the CommSec thing, I don't know how much the CommSec brokerage, so you could look at brokerage costs, but again, the ETF fee is the same wherever you buy it. It's just a brokerage issue. William says, with the new fee structure, I'll be switching small monthly to Vanguard. Would be nice if we can play the implications of ETF. Yeah, so I think I've covered that, William. All right, moving along. So where does it fit in the world? If costs are going up there and the ease of management is more here, going by a direct broker, we know it's cheaper. We know that there's no real bells and whistles, pretty much. Then we enter Spaceship and Raise, where the fees are starting to increase. You got your roundup features and all the other rewards program. I've actually got a Raise account because I like the Raise rewards and the roundup. And then I think the Vanguard Personal Investor kind of sits in the middle because there's a bit of a jump between, and to be honest, this is all platform land where investing direct is its own thing. And you really can't compare the two because it's so different. And then we've got our robo advisors like your StockSpot and SixPark, and then the advice platform with the financial advisor. However, features and ease of management, we know these platforms here, they're so much more flexible with tax. And for example, you can just, it's a whole other thing. But some of the time, these advice platforms, and I've seen it with my own eyes, they're actually not that more expensive. I've seen some super platforms that are cheaper than industry funds and they've got all the features. So for what that's worth. I reckon it sits in the middle. And then if we go to flexibility and, it's different matrix, most flexible being direct via a broker or with an advice platform. So an advice platform might be BT, Panorama, Macquarie Wrap, Hub 24, all the stuff that an advisor would help you set up. Cost, but flexibility and customization, it's pretty useless down this end of the world. And then we're kind of sitting in here. So I hope that's kind of helped or hindered. All right, well, we might leave it there. And I just want you to remember one thing. Not every investment product, not every investment platform is for every single person. So I really hope that this video has just shown you under the hood of the Vanguard Personal Investor, but also given you some information and concepts about how platforms work so you can apply that information to your plans with investing. Remember, be an investor, not a shopper for the cheapest platform every 10 minutes. Be an investor, not a shopper for the cheapest MER, ICR, or brokerage every 10 minutes. You'll do better with your money once you get a strategy, stick to it, and just go and pump it. So, Gordon, thanks for listening. And what do you think? Put in your comment, where do you think it fits in this? Did I get it right? Did I get it wrong? And to be honest, there's probably a bit of a scope for all of them to move. But yeah, you just need to know, direct via broker will always be your cheapest because it's your rental property and you're the property manager. But it's also the most flexible because you can move it around, you can do whatever you want. And yeah, that probably can come down, but also buy my book. Hey guys, thanks so much for watching. And this book is, I think 40% of this book is going to be on investing in shares, mortgages and property and super. So almost half of the book really gets into the meat. Hey guys, thank you so much. And I'll put a link below to the book and I appreciate your support.